All right, everyone. So I'm gonna go over a trade in natural gas, and today there were trading opportunities, but not really that many. The indexes, there was trading opportunity in the indexes, but it didn't set up quite right. But there was a easy one in natural gas. All right. So just go in Natgas. On. All right. So basically, after the market opened, it just kept on downtrending. It just kept downtrending. Okay. So we see is it starts downtrending, and you have to be careful about around the market open and around the times of crazy volatility. You can't really rely on anything because near the market open and close is just a lot of volume. That's just doesn't mean they're accumulating. It's just a lot of activity during that time of day. So you have to wait. All right. So at around 10:40, first of all, the market made started making a downtrend. All right. So you can see going down, 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 lower high, lower high. This was really nice. This sell, if you were able to catch this, it's really great. I thought when I initially saw this that the reversal was going to be here. I think it was here. Why? Because it's a stop run and heavy volume activities over here, meaning we're going to buy what you're selling. So I thought this was the change of behavior that was going to lead to uptrend, but it wasn't. The market continued to go lower, lower, lower. And what happened was, why it's doing this? Anyway, so what happened is right here, what do you see? You see an increase in volume and not an increase in distance. So it's something, all right? Can't really say more than that yet. You have effort, okay? It could be anything. You have both effort and high volume, no follow through, little or no follow through to the downside. You see the volume's at the bottom, but it doesn't continue down, and the column basically stops. On this column, you have high volume, but it's at the extreme low of the column, the lowest box of the column, and doesn't make new low. Then there's a little bounce. Then here, at that same level, what do you have? High volume, little follow through, but a clear indication in effort. Where volume increases and price is flat. More input, no output, with the same amount of output. More input for the same amount of output. That's a problem. And basically that's because of bag holding. So they're holding the bag here. And now, does that mean it's bullish? No, it does not mean it's bullish. What needs to happen is ease of movement to the other side to help confirm the potential of accumulation. For me, I can see this, and the market at a clear low, and this is the break right here. Right there. So once price does that, right, it makes trend. meaning makes the higher high. Right, so this is a break. It breaks the pattern of lower highs by making a higher high. It's not on that much high volume and not on big distance, but it's something. It's 1.4 times average up volume, and this high and that high get broken with the green bar. That's a breakout bar. And the other thing I notice is this area here corresponds to this area. And as I explained in the past, this type of pumping action, down, up, down, up, means that someone is buying whatever is being sold. So it's like the absorption of supply. Seller, this is a down bar. After that, immediate up bar. Seller, down bar. After that, green bar. Seller, down bar. After that, up bar, or whatever. So down, up, down, up, down, up. This pumping action is in a way it's stopping the down move. So in a way it's stopping action, but what it really is absorption of supply. So it goes to a support level, try to break it. As they try to break it, it gets bought. As they try to break it, it gets bought. As they try to break it, it gets bought, until supply is done and they take out the highs to go higher. And then after that, you have no volume on the first pullback, which is the indication that there's a lack of supply, because they probably exhausted themselves pumping here. And then finally you have the test. The test from where the move goes. So the entry is around here, and it's a little move, not a big move, but it's all right. It just counter trends back to the overnight low. Goes back up to the overnight low. So that's the area where I was expecting it to go. So how else do you what is it that you really learn from this? You learn the importance, and I'm going to explain this now. So in Wyckoff, one of the most important charts is quite simple. It's this is accumulation. That's markup. And that's distribution. That's markdown. So what we're trying to do, our objective is to get markup. And markdown. That's really what, if you're a directional trader, you have a clear objective. Your objective is to make money, and the way you do that is by getting markup and markdown. So what's the key to markup? Right? Is the answer is identifying accumulation. Okay? What is the key to getting markup? And the answer is identifying accumulation. So you cannot get markup without identifying accumulation, unless you just like clicking the green button as the price goes higher. Right? So the key to getting that turn is to identify accumulation. Now we're going to build on this a little bit more. What is, how do you identify accumulation? Well, if you're saying the key to getting markup is identifying basic and trading accumulation, what is the key to identifying accumulation? And the answer is effort, reward. That's the key to identifying accumulation. So, keep it simple. Effort reward identifies accumulation. Accumulation, what does it do? Projects or forecasts markup. Say ease of movement. You need both. Right. Effort reward helps you identify accumulation, and accumulation plus ease of movement helps you forecast markup. And just the same thing with the distribution. All right. This is why it's so damn important. This is why it's so important This is why it's so important to read volume, because you cannot see effort reward without volume. Without volume, totally blind, and you'll have to use other approaches. So this is why it's so important to know volume or read volume, is so that you can identify effort reward in order to identify accumulation or distribution. And when they have ease of movement after that, that helps forecast the markup and markdown. And the rest is just executing the process. And I've just given the very clear example of price going down, 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 down. This is a key level. You know, it was a level, and as it dipped below the level, you had effort here, potential accumulation, but then it had ease of movement, which validated that this is indeed possibly accumulation, and then executed on the test on the pullback to it, which yielded what? Effort plus ease of movement. Effort plus ease of movement forecasts what? Where is the thing? Markup. It was this accumulation that forecast markup. Now, the other thing that was really cool, which I was surprised actually worked, was that even on an intraday basis, there was cause and effect. This is accumulation, and this is the end of accumulation. So or the LPS. So this is the level. You go back, and I think it's 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. So then projected 9. So it's not a bad target. 1 second. It projected that high, and it's might go there off of this base. This is the LPS. This is the start of accumulation. So accumulation base. It's just a support level of accumulation. So accumulation support level. That's your cause. That's your effect. 3.63 is what it's projecting, which basically is near the high of this area. And that's where it's going. Now, I don't use cause and effect most of the time, but sometimes I do use it. Otherwise, it's best to just look at levels, especially on an intraday basis. But the idea is the same. This is the accumulation and the markup, and they are in harmony, in proportion, meaning the amount of markup is dependent on the amount of accumulation. All right, that's all I got. Take care. Bye.